So I want to go over today's agenda. So we've had the welcome, we've done the introductions, and then I'm just going to kind of do a Rural Zone 101 for you. I'm going to go through the handouts that I sent y'all. They were attached to the meeting invitation that I sent out, and also sent out a separate email with several documents that we'll be referring to throughout the day. So if you could print those out or just be able to refer to those, that would be great. I'm going to talk about just the rules on designation in general, and then go over the 3 different tax credits associated with rules on designation. Then Trisha's going to talk about businesses utilizing the tax credit, filling out the rules on certification form, and answer any questions. And then we're going to have Jessie Owensby come on to really talk to you. I mean, she has been a Rural Zones team leader since 2018. She's going to talk to you about just how to get started. What do I do first? Best practices, that kind of thing. Elizabeth Wells is going to talk about ways that she promoted the zone in her community, because what I want y'all to hear many times throughout the day is that promotion really is key. After seeing communities do this since 2018, what we've seen is the most successful communities, the ones that have the most businesses taking advantage of the tax credits, are those that promote it well and often. And many of those Rural Zone team leaders literally, when they walk their downtown, they remember to talk about the program, often. And then once you get some businesses taking advantage of it, then their experience, they share that experience with other people. So word of mouth helps promote it as well. Then I'll run through some more promotional material ideas, reporting, and then we'll wrap up. So that's what we'll do throughout the day. So we've already done introductions. Those rules on documents that I was referring to that were attached to the email and the Microsoft Teams invite, the rules on certification form, the list of approved NAICS codes for rural zones, the 10 rural zone rehabilitation standards, Department of Revenue's form ITRZ, and the rural zone annual reporting form. So a little background on the Rural Zone program. RURAL is actually an acronym that stands for Revitalizing Underdeveloped Rural Areas Legislation. Was signed into law in May of 2017, and we designated our first group of communities in the fall of 2017. And they began, the life of those zones began January 1 of 2018. And the purpose of the whole program is economic development and revitalization of rural downtowns. So here was that first set of rural zone communities. We designated 9 of those zones that year, and they will actually be expiring at the end of next year. Y'all are the 5th round of rural zone communities, and this year we designated 10 rural zones. And the life of your rural zone will also last 5 years. It's going to run from January 1st of 2022 through December 31st, 2026. Here are all the rural zones that we now have in the state. There are about 45 of them. So you can see we have a nice spread throughout the whole state. And do y'all have any questions just in general about the Rural Zone program before I start into the actual tax credits associated with the program? Trish, any questions in the chat?
Nothing in the chat.
Thank you. All right, so very basically, what is a tax credit? A tax credit is going to be a dollar for dollar reduction of the amount of income tax that a business is going to owe. And generally, these tax credits are going to save a business more money in taxes than a deduction. Because remember, deductions, they're only going to reduce the amount of income that's subject to be taxed, whereas the tax credits are going to directly reduce the amount of taxes that you owe back to the state of Georgia. Rural Zone tax credits are a state of Georgia income tax credit. Make sure that you know this, because this will be one of the first questions that people ask you. I get this question a lot. This is for federal? And I said, no, this is a state of Georgia income tax credit. These credits cannot be sold or transferred. There are some tax credits in the state, like the historic rehabilitation tax credits, that can be sold, but this is not one of those tax credits. And the rules on tax credits are also non-refundable. So what does that mean? That means that you can use your credits up to the amount of taxes that you owe. So up to the amount of your income tax liability for that year, but you will not get a refund for the rest of those in the form of a check from Georgia Department of Revenue. The remainder, though, could be carried forward to use against future years' income tax liabilities. Carry forward up to 10 years, and Tricia will talk more about that when we get into her section. Also keep in mind that this is not just a program for new businesses that come into your downtown, but it can also be used for the expansion of existing businesses. So that's really why it's also important to get the word out to even your existing businesses who may have been thinking about possibly expanding. Maybe you have a restaurant in your downtown that's doing really well. The building next door to the restaurant is up for sale. And so they consider purchasing the building, renovating the building, and then because they have expanded, they're obviously going to need to hire new employees. So as long as they hire at least 2 new employees, this existing business, would also be eligible for the rural zone tax credits for the creation of the businesses, the rehab, as well as the purchase of the building. So the goals of the program have been from the beginning to help revitalize rural downtowns by offering an incentive to try to get things going economically in the downtown. So to create jobs, get some commercial investment going, and businesses created. And there are 3 Georgia income tax credits that are the incentives associated with this program. You have the job tax credit, the investment tax credit, and the rehab tax credit. And I'm going to go through each one of those. But first, I want to say very clearly, and something for you to keep in mind as the Rural Zone team leader, because you'll be the person answering questions locally. The key to the Rural Zone tax credit program is job creation. All right. So the creation of at least 2 jobs is the key to unlocking all 3 of the Rural Zone tax credits. Someone that comes in and purchases a building in your rural zone does not get to take the tax credit until 2 jobs are created in that building. If a person comes in and purchases a building and rehabs a building, that investor or developer cannot take the credit, the investment or the rehab credit, until 2 jobs are created in the building. So just keep in mind that job creation is key for all of these 3 tax credits. So first, we're going to talk about the job tax credit. Like I said, you have to create at least 2 jobs, and these are full-time equivalent jobs. For each of those jobs created, the business owner can get a $2,000 tax credit on their Georgia income taxes. What's a full-time equivalent? A full-time equivalent just basically means that you can add together part-time workers to equal 1 full-time worker. For example, let's say you've got 4 part-time workers, each working 10 hours per week. Let me turn off my phone because it's making a noise. You got 4 part-time workers, each working 10 hours per week. So that's 4 workers times 10 hours. That equals 40 hours, or that's also equivalent to 1 full-time equivalent job. So you can aggregate part-time employees' hours. What businesses are eligible for this program? Those businesses with NAICS codes, which is North American Industry Classification System codes, these listed here. But basically what you need to remember is it's those types of businesses that you would want to see locate within your downtown, like a law office, a doctor's office, a restaurant, a bakery, a brewery, a bed and breakfast, a gift shop, a retail shop. Those are the ones that are eligible. But remember, you have the rural zone approved list of NAICS codes that you can always refer to when a business comes to you and says, hey, I'm kind of interested in these tax credits. Here's what type of business I have. You would then say, well, what's your NAICS code? If they don't know it, they could always ask their accountant perhaps. And then you could check it on your list to make sure that it is actually an eligible business under this program. So that's one thing you also need to always remember is to check that list. The job tax credit cannot exceed $40,000 per year. So at $2,000 a job, that would be, it can't exceed 20 jobs per year. But the credit can be taken by the business for 5 years as long as the jobs are maintained. So if they hire 2 employees times 2,000, that's $4,000 for the first year. They can take it for the second, third, fourth, and fifth year as long as those job positions are maintained by the business. So let's look at just an example of the tax credit. So let's say that 2 sisters are going to decide to open a funeral home on the first floor of a building located within the boundaries of Cordele's rural zone. And there are going to be 2 sisters working there and some part-time students working there. So what would their job tax credit be? This is actually a trick question because if you look up funeral home, and funeral homes NAICS code is 81221, funeral homes are not listed as an eligible NAICS code. Not something that you might want, right in the center of your downtown. So it's not an approved NAICS code. So just a trick question, I may throw those in there every once in a while. Yeah, so if you are looking at the last page of your approved list of rural zone NAICS codes that I emailed to you, the last page under personal care services, it ends at 812930. It does not include 81221, which is the NAICS code for funeral homes. So not eligible. But let's say instead that the 2 sisters are going to open a women's clothing boutique on the first floor of a building, again, located in downtown Cordele in the rural zone. Now, is this NAICS code eligible? And what I'd love for you to do is pull out your list of approved NAICS codes and see if you can find what the NAICS code is for a women's clothing boutique. And just holler out the answer when you get it.
That'd be 44812.
44812, that is correct. Yes, 44812 women's clothing store is an approved NAICS code, so that we know we can move on. So the 2 sisters that are going to open this women's boutique are going to work 40 hours a week, and then they're going to hire 4 high school students who are each going to work 20 hours per week. So what would their tax credit be over 5 years if all the jobs are maintained for 5 years? Well, first we got to figure out how many jobs have been created. So we've got those 2 sisters. They're working 40 hours a week. That's 80 total hours. And then we have the 4 part-time high school kids working 20 hours a week. So 4 times 20 is another 80 hours. For 160 hours divided by 40, that's 4 full-time equivalent jobs. So they've created 4 FTEs. So in year 1, they would be able to take 4 times $2,000 is an $8,000 credit the first year, second, third, fourth, fifth, for a total over those 5 years of a $40,000 job tax credit for the business. Now let's say that the business is not able, they don't have enough income tax liability to be able to use that $40,000 or maybe the $8,000 each year. If they can't use it all, then any leftover, like I said, can be carried forward against future income tax liability. About the job tax credit specifically, before I move on to the investment tax credit.
Nothing in the chat.
Okay. Anybody? The investment tax credit. This is going to be equal to 25% of the purchase price of a building located in the designated rural zone. Tax credit cannot exceed $125,000. The building for our new rural zone communities has to be purchased after January 1 of 2022 when your rural zone designation begins. So if you have somebody thinking about purchasing a building, like for instance, I know in Clayton, y'all have somebody looking at purchasing a building. I just talked to him the other day and informed him he does need to wait until after January 1st, 2022 to have the closing. So just keep that in mind. If you've got somebody looking, encourage them to wait until after January to purchase a building or do any rehab work on a building. So remember I said that the jobs are key to unlocking all the tax credits, and jobs are key to unlocking the investment tax credit. An eligible business has to be located within the building and create and maintain a minimum of 2 FTEs, 2 full-time equivalent jobs. Let's say, because I often get this question, so I want to go ahead and answer it. It could be a developer coming in and purchasing this building and leasing out the space to a business that will create the jobs, or the developer himself can create the jobs. It's just as long as 2 new full-time equivalent jobs are located in the building. Let's say that somebody decides to relocate into your downtown that's already in business in your city, and they currently have 3 jobs and they're going to move into the rural zone and bring the 3 jobs with them. They would not be eligible because that would not be an increase in the number of jobs. So it does have to be 2 newly created jobs to get the tax credits.
We've got a question in the chat. Can businesses take job tax credit and the investment tax credit in the same year?
Yes, they can. All 3 of these can be layered. All 3 job tax credit, rehab credit, and investment credit can be layered.
Also, is the investment tax credit only for real property, or could it also be used for personal property like restaurant equipment?
No, it has to be for the purchase of the building or land, yeah.
Now, the next credit Sheree's going to talk about addresses the items that they purchase to get the building ready for use.
Yeah,
so
right.
Stay tuned for that, kind of the last question, a little bit more on that.
Okay. Anybody else? Okay. The investment credit, this is getting a little bit more down in the weeds, but stay with me. The credit must be prorated equally in 5 installments over 5 tax years, beginning with the year the property is placed into service, but also when there are jobs created. So what I mean by that is, let's say somebody comes into a community, purchases a building. They are going to spend a year renovating the building. And so then in the next year is when they'll actually have jobs located in the building. The business would have to wait until the year in which jobs were created to begin taking the investment tax credit. So again, job creation's key. The business would have to wait until the year in which the jobs were created to begin taking the tax credit. And with the investment credit, an investor actually has up to 7 years to get a business in the building that has the new jobs. They have up to 7 years to get the jobs in the building. Let's look at an example of this. So let's say a local developer is going to purchase this 2-story building within Cochran's rural zone for $400,000. And his plans are going to be to renovate the entire building into apartments. So 2 on the first floor and 2 on the second floor. So what is the amount of his investment tax credit for this building?
None, because he's not creating any jobs.
Who was that?
Taylor.
Way to go, Taylor. Yes.
Yay.
Woohoo! Yeah, no tax credits would be available to this developer because there are no jobs located within the building. So let's change it up a little bit and say his plans are going to be to renovate the second floor into 2 apartments, and then the first floor is going to be leased out to a new law office with 2 full-time employees. All right, and a law office, by the way, is an approved NAICS code number 54111. So they would be eligible in Naics code, and they've also created the job. So let's see, what's the total amount of his investment tax credit? What did he pay for the building? $400,000. So 25% of $400,000 is $100,000. He wouldn't get all $100,000 that first year because remember, this one has to be prorated over 5 years. So he would get $20,000 each year for 5 years as long as 2 jobs remain in the building. All right, just a quick FAQ. So can an investor who comes in to a rural zone and purchases vacant land that is part of the designated rural zone receive the investment tax credit? The answer is yes, they can. But then inevitably the question is, okay, so what if that investor then builds a building on that vacant land? So is infill development eligible for the rehab tax credit? The answer is no, because new construction is not rehab of an existing building, it's new construction. So no, the investor cannot take the rehab tax credit, but they could take the investment on the vacant land purchase, again, as long as eventually there is a building there where 2 jobs are located. All right, any questions on all of that?
We already had the question in the chat and I said no, but I meant the other, the rehab.
Okay. All right, so now we're going on to rehab tax credit. Rehab is going to be equal to 30% of the qualified rehab costs not to exceed $150,000. What are qualified rehab costs? They're labor and material costs. So Trish, as far as I know, equipment's not allowed, but you tell me, is equipment allowed?
I would say anything that got the building ready, but
Okay.
you may have to talk to your CPA. I am a CPA, but you may have to talk to your CPA.
Okay. We can clarify this, later, but at this point, my understanding is labor and material costs for the rehab specifically of the building. This tax credit is going to be prorated over 3 tax years. All right, so over 3 tax years. And again, the regs say beginning with the taxable year in which the property is placed in service, meaning that there's a business in there and 2 jobs have been created. With the rehab tax credit, there's a little caveat with it in that the taxpayer basically can't double dip. So the developer can't use the same qualified rehab cost that it's going to use to get the rural zone rehab tax credits as it would to get other state income tax credits. For instance, the Historic Preservation Division's rehabilitation tax credits for historic properties. So you basically just remember you can't double dip. The business would need to figure out which of those programs is most beneficial to them as far as the tax credits go, and then use that one that's most beneficial. Also, we have 10 rehab standards. You have this also as a handout, something to refer to when somebody's talking about doing rehab work. There are 10 of these here. Basically, if I boiled these all down to a couple of sentences, it would be that if you have a historic building, that you're maintaining those historic features and details that make it distinctive, that you're not removing all of those historic features. You're not completely altering the appearance of the historic building. As the Rural Zone team leader, if you have any questions about this, go ahead and talk to me prior to the business doing the rehab work so we can make sure that it does comply with the rehab standards. If your community is one that has a locally designated historic district and has a historic preservation commission that is active and actively reviews exterior work to buildings within that locally designated historic district, meaning that they issue COAs or certificates of appropriateness for those projects, or they deny the proposed changes to a building. we will accept the COA issued by your Historic Preservation Commission, that it does follow the standards. So we will accept the COA from your Historic Preservation Commission if you have one. But if you don't have a Historic Preservation Commission that's reviewing exterior work, we would want the project to comply with the requirements, those rehab standards, and you, like I said, you're welcome to talk to me about proposed work prior to the rehab work starting so that we can together make sure that the work meets the standards.
Ms. Cherie, so when we submit the business's application, will we submit that COA alongside the application?
Yes, that'd be great. Yeah.
Okay.
All right, so let's look at a rehab tax credit example. Same example we looked at before. Renovation of the second floor into 2 apartments. First floor is going to be that law office with 2 full-time employees. They spent $150,000 on the first floor and $150,000 on the second floor for a total of $300,000 in rehab costs. And 30% of that is going to be $90,000. And remember, this has to be prorated over 3 tax years. Again, those 2 jobs have to be maintained for all 3 tax years. And so they would get a $30,000 per year tax credit for the rehab work. Again, they may not be able to use all of that $30,000 each year, but they can carry forward any leftover for up to 10 years. Oh, recent regulation change, just to let you know, that's a lot of words on this page, so bear with me. But basically, we were able to change the regs so that somebody that comes in and leases for at least 3 years, and that's the key, they have to lease for at least 3 years a building, specifically for the purpose of rehabbing the property, can then get the tax credit if they sublease it out to a business that creates the 2 jobs. This came about because of a project. A building was owned by the DDA. I believe this is in downtown Moultrie. The building is owned by the DDA. The DDA doesn't have the expertise or the money to rehab the building, but was willing to lease it out to a developer who could and had lots of experience rehabbing historic property. It was going to lease it out to him to rehab it, and then he's going to sublease the property out to about 10 or 15 different little businesses. And so he would be able to take the rehab credit. Okay, hope that wasn't clear as mud. Any questions? Any questions on the rehab tax credit?
Nothing in the chat.
Okay. Can the 3 rules on tax credits be combined? Yes, all 3 can be layered, and they can be layered in the same year. And here's an example of that down in Bainbridge. This is the Southern Philosophy Brewing Company. They came in and purchased this building, the Fleming building, several years ago. Building had a lot of damage, even more damage once they got, especially to the front facade, once they got into it. Here what the interior looked like kind of before and during rehab, nearing completion, and then after rehab. This is what the building looks like now. It is a tasting room and has been very successful. They also have back in the back alley some tables, and they can open their, you can see that this door slides, or maybe it goes up, I can't remember, so to easily allow access to the back patio so people can go out there and play cornhole and sit out there if they want to. Been a very successful business in downtown Bainbridge. And they were able to take all 3 tax credits. They created 3 jobs, so that is $6,000 per year. And over 5 years, that'd be $30,000. They paid $41,000 for the building, so 25% of that purchase price is $10,250. So they'll be able to get $2,050 per year on the investment credit. The rehab credit, they spent about $70,000 rehabbing the building. And so the rehab credit is prorated over 3 years. So each year they'll get $6,970. So just in the first year of tax credits alone, that they could receive $15,020 in tax credits that first year, and then over 5 years, their total credits are $61,160. So this is something that can really help a brand new business starting to know that they would have this kind of credit and not have to worry about their Georgia state income taxes. All right. If there are no more questions for me specifically on the tax credits, and of course we can always come back. You can always ask throughout the session if you need a recap or something. We can talk about that. Are there any other questions specifically on the 3 tax credits? All right, well, I'm going to turn it over to Tricia then.
Hey guys, you can turn the next slide, Sheree.
Okay.
The first thing I want to say is, please keep in mind, okay, this is the rural zone tax credit certification form that you as local team leaders, coordinators are going to have to probably assist the business a little bit in filling out. I want you to know that, please keep in mind, this is the first year for you guys. This is going to be new. You may generate questions you don't know how to answer. Please feel free to ask us. We're happy to help with any and all questions. So don't feel like you're an island out there when the businesses come to you and need help filling it out and such. So this is the top view of the entire form. Let me go ahead and turn that. Okay, before claiming any rural zone tax credit, the certified entity or the investor must apply for the certification, for a certification form, this form to be accepted. This is going to validate the business location where the jobs are being created or the investment has been made, including the rehab credit. It is located within a currently designated rural zone. So that's what you're saying. You're saying that this is, by signing off on it, you're going to say this is within the rural zone. This form allows the company to participate in the rural zone tax credit program. So without this form, they can't file this on their tax return. So the form is going to include, as you can see, they're going to check a box in part 1. It's investment, rehab, job creation. They can check all 3 if all 3 apply to their business, or whichever ones apply to the credit they're applying for. They're going to put the name of the applicant, which is going to match the business that the tax return is going to be filed under. So if you can't remember this, we can always edit these forms when they come in or whatever. So just know that, get something down there, hopefully the name of what's going to be on the tax return. The next line, you've got to enter the address of the location, which is in the rural zone, and perhaps the investor, whoever it is receives their mail at a different location than the business. So then they can put that down as well. You guys are going to probably help them with the parcel number. And then the business is going to put their NAICS code for the business creating the jobs. So if they're not the one creating the jobs, they don't have to fill that line out. So then the next line is going to be the name of the business actually creating the jobs and the number of FTE jobs created in the taxable year. So keep in mind that the business that is not creating the jobs needs to retain a relationship with the business creating the jobs so that they can know how many FTEs are going to be created. For this form, please keep in mind that these numbers up there on that first line under the investment block, the purchase price, the number under the rehab block of the rehab costs, and then that number down there under the number of FTE jobs created in the taxable year are not final. They're a guideline. The accuracy of the dollar amounts is not, it's important, but it's not end all and be all. So say between the business having this certification form filled out and when they file their tax return, they've discovered additional costs, or the jobs they thought were going to be 2 or 3 and they're 5, whatever filed on the form that goes with their tax return, which we'll get to that form in a little bit, is what's Bible. So this is merely a guideline. The accuracy of the numbers is not as important as what is on the form that is going to be filed calculating the actual credit. So I hope that makes sense. So the business is going to then have an officer sign their part 1 of this form. The officer is going to sign, print their name, date, phone number, title, and very important, I need an email address on there because we email these out. We haven't mailed them out since COVID started. So I always want a clear, valid email address. Okay, you can turn to the next one. Next slide. Thank you.
Sorry, it's I'm trying to do it.
Okay.
There we go.
Okay. So once the business that's claiming up to all 3 of those credits fills out part 1, they will bring this form to you guys. You guys may be filling it out together for all I know, but when you guys get this part, this is your part as local coordinators, team leaders to fill this part out. So you're going to sign it and you're going to print your name, date, title, all that. So what you're saying by signing this is that the entity is within the rule zone, the approved rule zone, and the business meets all local ordinances and licensing standards. Okay, so once you sign that, you forward it on to us. You forward it on to us at DCA, send it to me, or there's an OED address down there at the bottom in part 3, so you can mail it to us, email it to me, or email it to the OED address. I will acknowledge it, date it, send back to the local team leader, the local coordinator, a copy of this signed certification form and a 2-page letter. Now, I will also email it to the business that filled it out in part 1. Now, the certification, remember, it's letting the Department of Revenue know that we have certified you to be able to take those credits. So this has to be attached with the 2-page letter. So the 2-page letter and this accepted certification form must both be attached to the tax return that's claiming the credits. Okay.
Trish, I got a question in the chat. Keith is asking, is there an audit of job creation by Department of Revenue, or is it self-reported each year?
It is self-reported by the person, the business creating the jobs. But at any moment, there could be an audit by DOR. I work closely with them on the regular job tax credit and this credit, and I don't know their percentage of audits on these credits, but there's got to be backup saying, okay, these are the jobs that were created. This is my backup for the investment credit. This is my backup for the rehab credit. So the form that's filled out that, like I said, is Bible and has the actual final numbers on it is called an ITRZ. It's a Department of Revenue form, and Cherie mentioned it earlier in her presentation. That's the one that the actual credits are calculated on. And just keep that in mind.
But correct me if I'm wrong, Trish, even when the form ITRZ is filled out, you don't have to attach a lot of documentation to prove it, but you should have that documentation in a file should you be audited.
Absolutely, absolutely. That's what I'm getting at, for sure, for sure. You just fill out the bare minimum on the ITRZ form. There's no attachments other than this certification form and the 2-page letter that you'll receive from DCA. That's the only additional items that need to be attached. Does that make sense? Does that answer the question? Okay. You can go to the next slide. When claiming the credit, I want you to know that the position is what is created for jobs. The position is created, not you have to have Sam Smith in that job for 3 years or 5 years. It's the position being created. You know, there's 3 part-time positions, there's 4 part-time positions. So keep that maybe in that file as well, so that if you need to back up, the business needs to back up saying, oh, we've got 3 jobs, here's the 3 jobs. And then you're going to have to calculate the hours and stuff. The business is going to have to make sure that they meet the FTE requirements. So they're going to have something in a file, but it's not reported on that form. You can breeze past this one. This is all the stuff I just talked about. So it kind of explains the form. Keep going. Keep going. This is it. Okay. So I did want to reiterate that it's the position, not the person in the job. You don't have to say, Sam Smith, you've been here 5 years, whatever. So I want you to keep in mind that what Cherie already explained as well, the credit can only be used against Georgia income tax liability. So that's a dollar for dollar reduction in your income tax. So it's not, Cherie already explained the difference between a credit against expenses and a credit against your income tax liability. So refer to that slide as well. So the amount of the tax credits for a taxable year, as Cherie also mentioned, I want to reiterate, they cannot exceed the certified entities or the certified investors' total state income tax liability. Go ahead. So the unused income tax credit can be carried forward for up to 10 years and applied against future state income tax liability. So they've got 10 years to use up any carry forwards. Oh, that's another point I wanted to make. If an individual has the tax credit on their tax return, they don't have to separate out the income from the rural zone project and their other income on their Georgia return. This credit is used against their total income tax liability. I get that question often, asking, do they have to only use the credit against their rehab costs or whatever? No, it's against the individual or the business. You know, if the business has other sources of income, it's against their total Georgia income tax liability. It doesn't have to be carved out just in relation to the rural zone. Okay, go ahead.
Okay, and I also had another question that's from Frank. He asked if I could send out this presentation. Yes, afterwards I will send out this presentation so y'all have it.
Absolutely, then you can refer to the slides. It's helpful. Okay, Cherie did explain the full-time equivalent. So a full-time equivalent is the aggregate of employee hours worked totaling 40 hours per week, the equivalent of one full-time job, provided the work is performed by at least 2 people. But keep in mind, if there is, say, the owner or someone else, an employee, if they work 40 hours, then they're already one full-time job. So when we talk equivalent, that means some amount less than 40 hours to total up to 40 hours. But the owners may perhaps work 40 hours, or there's a couple of employees working 40 hours, as in Cherie's example, that were the 2 sisters, and they each worked 40 hours, but then they had 4 students working 20 hours. So then that's a couple more FTEs. I want to make that clear that a full-time person is a full-time person, but the equivalent comes into play when it's more than one person making up the job. Okay.
Okay, sorry, trying to advance.
It's okay, I'm thirsty.
It's hung up.
It's okay.
May I ask a question real quick, like?
Go ahead.
All right, this is David from Cochrane. I've got somebody who's in the process of buying a building right now downtown. They're closing like the end of the month. This is all they've been working on this since before we knew about the rural zoning. So they are going to purchase it. The closing's probably going to happen before the end of the year, but they're going to be doing rehab work. If they can't hold the closing until the first of the year, I'm assuming they could still, if they did the rehab and had the bills after that, they just couldn't get it for the closing of the building, purchase of the building, but they could get it for the rehab and the employees.
Correct.
That's right.
Is that correct? And
That's correct.
one other question, for, you mentioned earlier about two owners of a building, say it's an LLC and they're, not really taking out regular full-time or, regular checks. They're not doing, they may be doing, something different than a regular W-2 or whatever the case. Even though, but they're still working their full-time hours. They're just maybe handling how they pay themselves differently than they do their employees. Do they have to have themselves set up in the traditional payroll sense where they get a W-2 like a typical employee, or can they have, where they're getting their W-9 for
Distributions.
their distribution of income later in the year?
They've got to be a W-2.
They've got to be a W-2. Okay.
That's kind of how DOR is gauging that they're an employee.
I figured they would need that record keeping, so they've got to be W-2. All right, thank you.
Right, Trish, 1099s don't count.
Correct. Or distributions in the way of an LLC's owners getting their money. And this next paragraph's kind of in the weeds as well. And it just shows that if the business is already there in the rural zone and they're adding jobs, you've got to show that you're adding the jobs, where this is the calculation. You've got to compare your monthly averages year over year to make sure you're adding two to be able to take the rural zone job tax credit. So that's kind of, you can read through that paragraph, but it's a lot. And it's in the regulations as well, I think. Okay, this we're going to kind of go a little bit faster through because this is kind of getting in the weeds. I just wanted you to see what the ITRZ from the Department of Revenue looked like in case a business, their CPA should be able to fill this out, but it just runs through the calculations of, and this is the grid I was talking about where you do make the comparison year over year if it's not a brand new business. But keep in mind too, the one thing I do want to reiterate is that the business, I said this kind of at the beginning, the business that isn't necessarily creating the jobs needs to keep a good rapport with the business creating the jobs so that you kind of know what their ITRZ looks like to make sure that you're enabled in any year to take your rehab or your investment credit, because remember it's on hold if the jobs aren't created and maintained. If they're, you can't take it unless they're created, but then if they're not maintained, you can't take the credit in any given year that they're not maintained.
Trish, if let's say a business loses an employee, do they have to pay back any previous tax credits, or do they just lose it for that year in which they don't have the two employees?
They'll lose it just for that year, as long as they get back up over that hump the next time, the business creating the jobs, because you can't take it in any year that there's not at least two. But they can restart taking it. They may miss year 2 out of the 5 years, but then they can go back and take 3, 4, and 5 as well. You can turn past that one too, Sheree.
Okay.
As Sheree mentioned, you guys got a listing of the acceptable NAICS codes. Now, perhaps there is a business going into your downtown that is not on the listing, but it's a business that you guys want in your downtown. There's a vehicle to seek guidance in cases where the NAICS code is not on the listing. The businesses would need to petition our commissioner, the DCA commissioner, for approval of their NAICS code before taking the roll credit. So, and this would only apply to your downtown. It doesn't, when we allow an NAICS code that's not on the listing, it only applies to that downtown. It's not across the board. Everybody can have the business in their downtown. You've got to seek it, you know, as that downtown rule zone. So the request for determination is what it's called, and it's just a dated, signed letter. Make sure it's dated and signed. Believe it or not, I get them that are not dated or signed on the job tax credit program. It's written in paragraph form on the company letterhead. So it's just going to outline timeline of events and circumstances, their business operations, activities, explain what the type of business is, what kinds of customers are serviced, and as always include all the contact information, and being as descriptive as possible will help us not to have to come back with a lot of questions. And the business, of course, will come to you and you'll say, oh, it's not on the NAICS code listing. Maybe we can write a letter, and then you may have to handhold them a little bit and help them write it. And if you mail it, you can mail it to Commissioner Nunn, or you can send it via that OED email address. There's something else I wanted to state.
Can I just chime in right here, Trish, while you're looking for that? An example of this, and I think Jessie may actually tell y'all a little bit about a request for determination that she had. Remember, Jessie is one of the first group of rural zone communities that we designated the city of Cornelia, and she had a business, and I think had just assumed that an event facility would be eligible for the rural zone program, and it actually was not on the list of approved NAICS codes. So she sent us a request for determination on this event facility, and DCA and Department of Economic Development realized that event facilities should have actually been on that approved NAICS list code. So because of her request, we added event facilities to the approved list, and so now anybody can use that code. We have had other folks submit requests for determinations for projects, and it was only approved, you know, just one time in that community for a specific instance. But we can do either of those. So always let me or Trish,
about the event facility.
Yeah, always remember to let me or Trish know if you've got one of those issues. Now, I mean, if you're going to have a I think the one that came up was a fertilizer making plant. That's not something that you necessarily want right in the middle of your downtown. So, you know, something like that might be denied. But if you've got something that makes sense and it's something that your DDA or your Main Street or your city really wants to see in your downtown and it's not on our approved list, you can always submit that request for determination.
And I also think, if I'm not mistaken, in that instance, wasn't it their corporate offices of the fertilizer plant? So I think we ended up approving it.
That's right.
Because it was not, and that's the point that I was going to make, is that the NAICS code on the tax return isn't necessarily what that business does. From being on the tax preparation side years ago, I saw, you know, businesses that were started in the 1920s, and by 2000, that's not what the business was doing anymore or what their focus was. But the CPA never changed the NAICS code. So in that instance where you send in the request for determination, you just say, listen, our NAICS code on our tax return says this is what our business actually does now, or this is what we want to house in the downtown of our business. So there's a lot of different scenarios in which, even if the NAICS code is not on the approved listing, it may be something, a different part of that business or something.
Another question. Yes, somebody, Barbara, you asked, have people gotten things approved like axe throwing or escape room? Yes, I think Jessie actually recently submitted a request for determination for an axe throwing facility in downtown Cornelia. So you would also need to submit a request for determination on another axe throwing business, because it's not, as it is, it's not on our approved list.
Jenny, we don't have examples of the request letter. It's just, same thing. There's no template for the regular job tax credit request for determination. It's just throw it down there in paragraph form, and if there's holes or there's questions we have, we'll get back to you. And It's not a problem. It's not so formal,
Right. But we don't really feel comfortable sharing other people's requests for determination because it has business information in there, and sometimes it's about a business that hasn't even announced that they're coming to a community yet. So that's sort of confidential information that we can't share. Somebody asked, what is the number for the event venue? I always forget. I'll have to look it up. I'll answer that in a little bit. Okay, do you want me to go to the next slide?
Yeah, we're in the frequently asked questions now.
Okay, hung up again.
That's what you get for not being in the office today, Missy.
Oh no. Okay, here we go.
Okay, Cherie did touch on this. These credits are not transferable or saleable. Some credits like film tax credits, some other credits are, but the rural zone tax credits are not transferable or saleable. How can the credits be used? We've touched on that. They can be used only against Georgia income tax and not against payroll withholdings, because that's the regular job tax credit as well. Can I combine this job tax credit with other job tax credit designations under the job tax credit program, like the county tier, military zone, less developed census tracts, or opportunity zones? And the answer is no. But if a business is going to qualify for the regular job tax credit, by all means, they can take that, but it will still qualify the investment in the rehab credit folks to be able to take their credits, because the job tax credit regulations are a little bit more stringent of requirements. They've got minimum hours, minimum pay requirements, and they must offer health insurance. So if they are able to take the job tax credit, it's a little bit higher of dollar amount of credit to take, so they can always do that, but not combine them. If the we did touch on this as well. These are also at the end, in case you get these credits, there to reiterate what we've already said. If the investor or business cannot use all of its credits, can the business receive a refund? The answer is no. And in addition to those of you that were chatting up the LLC and such, you may know that you can't carry it back either. So you can't go back and amend a prior tax return to receive a refund on those taxes. Okay, if the business's number of employees fall below the required 2 FTE jobs, what happens? So according to the statute, the law code, the income tax credit is not going to be allowed during that year. However, if the employees increase back to the 2 FTEs in a year before the 5-year window has lapsed, then they can resume taking the credits. And also, we said that prior year, there's no clawback, there's no nothing. The prior year standalone. If there are 2 businesses located within the investor property and one of the businesses employs 1 FTE and the other business employs 1 FTE, can the investor take the investment and/or rehab tax credit? And the answer is yes. Since 2 FTEs were created within the 1 building, it is allowed. However, the businesses are not eligible to take a job tax credit separately because they have not independently created 2 FTEs. Can the rehab tax credits be used to pay for the demolition of a deteriorated building? As a general rule, tear down of facilities within the rule zone will not be permitted to claim the rehab credits. However, you do have an option to discuss that with DCA via that request for determination.
The only time that has happened in the past 4 years, 4 years, was in the case of a building being hit by a tornado. So,
what type of expenditures qualify for the rehab tax credit? Those with labor and materials, as we stated earlier. Can the lessee tenant take rehab credits for the leasehold improvements? Yes. Would infill construction, so that's rededication of land in an urban environment, open space to new construction, qualify for the rehab tax credit? And the answer is no. Can the person who purchased and rehabbed a building but does not receive the W-2 qualify as a new job? No, they've got to be W-2 like we mentioned and not 1099s. If 2 owners of the building start a management company that will be doing the build out, can the owners be the 2 employees required for the first year until other positions are created? So they cannot be the jobs created unless they somehow get a W-2. But they're doing the build out, so they're not really employees locating in that building. So they would have to wait until a business went into the building. How would the tax credits apply in a scenario where corporate office is housed in the rural zone, but auxiliary space, think a warehouse, or like we mentioned, the fertilizer company, it's outside the zone. So we've had the question, can the jobs from the corporation that operate outside the RZ be counted for the credit? And the answer is no. They've got to, maybe they'll qualify for the job tax credit, but they don't qualify for the rural zone tax credit. Hope that makes sense. If the investor purchaser of the property rehabs the building and the lessee also does repairs and renovations, do they both get to take the rehab credits? We kind of answered that a little earlier. I need to take that slide out. Yes, the answer is yes. So we've had this situation come up. A business is purchasing the building and making a few improvements. They will lease the building to an existing tenant. They will not create any new jobs, and they'll finally lease to a new tenant that will create more than 2 jobs. Does the purchaser landlord investment in this project qualify for the rural zone tax credit as the investor for purchasing the building and making some improvements? Yes. So long as the 2 FTEs were created and maintained. So the FTEs already in place prior to the purchase, those will not count towards the credit. So the person that had the existing tenant will not get the FTE, the job tax credit, in other words. If the owner sells the property, would they be penalized for previous tax credits used? Would they owe anything back? No, as we stated, each year stands alone. There will not be any clawback, but moving forward, the owner will not have any more rural zone credits. The credits would end once ownership changed. What happens if an owner purchases and renovates multiple properties within the rural zone? So the owner entity would be subject to the limitations of each credit per project. So we've got on the job tax credit, we've got 40,000 limit per taxable year. The investment credit is 125,000 per project, and the rehab credit is 150,000 per project. So they could do multiple projects.
So they can do multiple projects and get up to those amounts for each separate project. Okay, that's a new FAQ you added.
Yeah.
I wasn't sure about that. Okay, good information. All right, so that wraps up Trisha's presentation. Were there any other questions that popped up?
This is a lot of information. You guys are going to be able to have it in front of you and look it over and submit questions, you know, email or call us or whatever.
Yeah, I was going to say, you know, some of that is a little like your kind of eyes start to cross after a little while. Moral of the story, just remember that me and Trish are here. And if we don't have the answer, we will call somebody over at Department of Revenue and figure out the answer for you. This is still a fairly new program. Even after 4 years, we still have scenarios that come up that haven't come up before. So again, don't feel like you're out there on your own. If you have a question, we're always here. You can email or call us.
We have a great relationship with Department of Revenue. We have open door policy with them to discuss since the program is new. They're always willing to chat about it with us.
All right, so Jessie is going to come on now, but I'm going to need to take a little break. So I'd love for y'all to go maybe grab some coffee, take a bathroom break while we're getting Jessie in here and her presentation set up. It is 10:23. You want to start back at 10:30? We will see you at 10:30.
Did I go over? Okay.
Oh, you are good.
I didn't have the agenda on my screen. How's the dog, John? Oh, he might have left. Yeah, I just saw that one about the per project when I was looking it up in the regs. So I said, let's add that.
Bree, I wasn't sure if you wanted me to introduce myself earlier.
Oh, yes, Frank. I'm so sorry. Yes.
Well, no, I was kind of a last minute addition to the meeting, but I'm glad to be here.
Yay, I'm glad you're here too, and I'm glad you're here in City of Forsyth.
Yes, yes, yes.
All right, hopefully Jessie can join in now. I'm gonna go warm up my coffee. I'll be right back. Jessie, are you on?
Hey, Sheree, it's Elizabeth. Can you hear me?
Hey, yes, I was hoping y'all could go over that last slide that Sheree, you said, oh, that's new or something. I missed that part. I'm sorry.
Oh, Trish, that last slide that just said
Okay.
a developer can have multiple projects.
Right. It if an owner has more than one project, they're just subject to the limitations per project. So they can only have $40,000 of job tax credit in any given year, $125,000 per project. So that's the entire project. on the investment tax credit, and the rehab is 150,000 per project. So they could have multiple downtowns or multiple projects in the same downtown. They just have to be, they're just subject on their tax return to the project limitations.
And each project has to have a minimum of the 2 jobs, right?
Correct.
Okay, thank you.
You got it. Sure thing, Jenny.
Thank the Lord, Jessie. I was like, what is going on?
I'm here. I know.
I think it wasn't like I was telling it to send it to you because, but you had already, I guess, I don't know. For some reason, it wasn't resending it to you. So thank goodness.
I know. I don't know what kind of wizardry you've done here, but thank you.
Thank you.
Hey, Trisha.
How are you?
Good. How are you?
Fantastic.
Now that you're done with your part, you're great.
Yeah, y'all. I miss actually being out there. I would rather go to a place and, you know. Although today's would be here if we did it, but.
Oh,
all right.
Anna.
Are you ready, Miss Jessie?
I'm ready. Do you want to share my screen? What do you want to do?
Can you do that?
Yeah.
Okay. All right. Give that a shot. All right, everybody. This is Jessie Owensby. She is, she puts up with me a lot because I ask her to speak a lot because I think she has a lot to offer, and she has put together this great presentation about just her advice and lessons learned on how to get started with a rural zone. She has been the rural zone team leader in Cornelia since they started January 1 of 2018. And I just think she's pretty awesome. So I'm going to let her go ahead. Yes, Tracy, she is a rock star. You're right. I'll let her go ahead. And if y'all have any questions, she's pretty informal too, so y'all can probably ask her questions, or you can always put them in the chat, and I'll read them out to her as they come in.
Thanks. Y'all say that, but can't figure out how to get this thing started, so I'm really not a rock star because I don't know how to work this PowerPoint.
We see your first screen, your first slide.
Oh, okay, you do?
Yeah.
Okay, good. Well, hey. I'm not seeing what you're seeing, so if you're just seeing the first slide?
Yes, ma'am.
Okay, good. All right, well, let's get started then. Hey, everyone. I am Jessie Owensby. I'm the Community and Economic Development Director for the City of Cornelia. We became a rural zone community, one of the first cities, in 2018, and I have learned a ton since then. So I'm going to share some of what I have learned, good and bad, because there's some lessons that I've also learned. But I will start with, you have become a rural zone. Now what do? You see that slide, Sheree?
No, ma'am.
Oh, see? What's happening?
I see the do's and don'ts of rural zone marketing for your community.
Oh, that's not what I'm supposed to be on. Okay, hold on.
Okay.
How about now?
Yes.
Okay. Yay, you're a rural zone.
Yay.
Now what? Well, the first thing that you should do is put all of the rural zone information together in print and digital so that you can have it on hand for anyone interested in opening or expanding a business. I have it in digital print because, you know, we're a digital culture. But when someone emails me and says they're interested in opening a business in our rural zone, I can email them that information. A lot of people request that so that they can look through it themselves. But when someone calls me and says they want to meet with me about opening a business in our rural zone, I set up a meeting with them. And one of the things that I go over is this rural zone designation. So we have this little one-page thing that we do in our packet for our small business recruitment people. And when they come to my office, this is all of the things that our small businesses qualify for. And as you can see, the rural zone designation is highlighted in there. I also provide supplemental documents, which I'll get to in a little while. And we go through everything. So that is one thing that you need to do, is make sure that you have all of the information. You need your map, you need your NAICS codes, you need that, I promise, I swear. You need all of the one-pagers. You need to be able to explain it in layman's terms because it's not very easily understood unless your name's Trisha. So, she knows it.
So true.
Okay, the second thing that you need to do is make your rounds and talk to any and everyone. I'm a people person, so I have no issues with this. Some people do. However, you're going to have to get over it because this is incredibly important. So the first thing that we did when we found out our designation was we sent out a press release to all of our media outlets, radio, newspaper, social media, everywhere. We put it everywhere. Then we also conducted a lunch and learn. We actually invited a bunch of local CPAs and realtors to come for this lunch and learn. We provided lunch, and we provided Sheree and Trisha to come and explain it themselves. That was very, very, very valuable to my community, and I'll tell you why in a little while. You also need to go to your civic club. So if you have a Rotary Club, you can request to speak. I know that they're picky about who they have, but you're important, so you need to talk about it to them. Your Kiwanis clubs, your local chamber, anywhere that will come and let you talk, you need to go and talk. It's pretty important you get the word out. One of the other things is to update your website. We have all of our rural zone information in several different places, so it's easy to find or search. Our website is awful, and we are in the middle of doing a brand new website from the ground up. However, because of that, and because there are so many different places where you could find information, I'll just show you this video. I have this under the economic development page. If you scroll down, you'll see all of the supplemental documents that go in our packet, including all of the rules on information. It is all right there together. you can just click it one by one, as you can see. And then when someone is interested in opening a business, they can go to that economic development page and find all of those documents, or I can email it, or they can come and meet me. So there are very many avenues for these people to get this information. You can also type it in the search bar, and all of the information will show up in the search bar, as you can see. And then you can also go to our Main Street page. So our Main Street program, you know, is in charge of our downtown development, and our rural zone is in our downtown. And so we also have this on the Main Street page for smaller businesses or the DDA who just want to get in there. All the supplemental documents are there as well. So there's a lot of different places you can find this on our website. And that's important for these people to be able to go there in case, even if after they met with you, they lost their documents or they didn't understand it and just need to review it real quick and they don't have it in front of them, they can go to our website and get that. Okay. The next thing you need to do is talk to your existing businesses. This is so incredibly important for so many reasons. So we had a business, it's called Sugartopia, it's a bakery. They were thinking of expanding, but they didn't want to spend the money on building a new building. They were not in our downtown. They didn't really know what they were doing. But when we were designated as a rural zone community, it just so happened that a vacant space had just come available and she snatched it up real quick. When she did that, she leased the building, but she did all of her own renovations and she created 12 new jobs because she was able to expand into that bigger place. And now she's so busy, she's like trying to sell the business because she's so busy and she doesn't want to be that busy. However, that is so important for your existing businesses, especially the ones who may not be located in your rural zone already, because that makes them want to come to your rural zone, which is the goal. And so she actually came up to me one day and she knocked on the door of my office and I said, hey, and she said, hey, I just came up here to thank you for the $6,000. And I was like, well, girl, if you had $6,000 that I gave you, please give it back. And she said, no, it was rural zone money. And I was like, oh, okay, good. It wasn't my money, but it is free money for your existing businesses. If you have any type of business that's already in your rural zone that wants to expand. I've got another one that was just a 2-person show. Now she's got 6 people working under her and she's getting those rural zone tax credits. So it's free money. Don't leave it on the table.
Good advice.
Okay. This is what not to do. And I will tell you why not to do it, because I did it. And now I know not to do it. So the first thing you want to do is not wait. You only get 5 years, and it sounds like that's a long time. I mean, you can get a whole bachelor's degree plus some in that time. That is not a long time. I'm actually pretty nervous because my community is just now getting the traction in the rural zone that I wanted it to get the first year. Even doing all of these things that I just told you about, I'm just now getting traction and I'm in year 4. So what I'm doing right now is telling people who are interested and then they go away and you never hear from them again. I'm telling them, if you want this tax credit, now's the time, because it expires and you won't get it next, in 2026. So, or 2020, whenever. 3. So you cannot wait. You need to get started now. That's why I said you need to go speak to any and everyone that you can possibly find. And then these pictures are just one of the rural zone projects that we did in 2020, so they'll be taking tax credits. Yay. Okay, another thing not to do. I know this because I did it. Don't do it alone. Find someone else within your organization who can go through the training and knows about this program. I did not do this because I thought I was something. I was designated by my boss as the rural zone team leader, so I took it, and here's what happened. If something were to happen to me, this program would die because nobody knows what to do except for me. If I were to go anywhere, nobody would know what to do except for me. So make sure that there's at least one other person within your organization that knows about this program and that can help you. The other thing is, don't think that anybody outside your organization is going to care as much as you care. When we were designated a rural zone, I took the economic developer from the county with me to our rural zone training, thinking that he and I worked together a lot in economic development, and we maybe could tackle this together and he could help promote. Guess what? He was real busy trying to recruit some huge industry and retail development, and he never thought about a rural zone ever again. So what you want to do is make sure that someone within your organization goes to that training with you. And I suggest your building inspector and or your fire marshal. I'll get to that now. You need to communicate with your building official and your fire marshal. This is so important because they are the ones who are issuing permits. They are the ones who are issuing COs for these businesses. And a lot of these businesses are in historic buildings. So you're going to have to be on the same page with your building and planning department and your fire marshal, or this program is not going to be successful, because they can really hinder you if you're not on the same page. So what we like to do, the three of us, we have a monthly meeting every month just to talk about any new projects throughout the entire city, because we don't have the one for downtown and one for, it's just me for the whole thing. So we have this meeting. It's the fire chief, the assistant fire chief, the fire marshal, the building inspector, and myself. And we talk about every single development or permit that's coming down the pipeline, plans that are in review. We talk about it so that everybody knows what's going on. In addition to that, when I have a business owner who wants to come and open a business and it's in our rural zone, we, three of us, go together to look at the property that they're interested in. There are so many reasons we do this. One, it's to keep each other accountable, because if I say something and then 2 weeks from now I say I didn't say that, one of these two guys is going to tell me, yes, you did. I heard you say it when we were there. Same on the other side. If my building official says this is okay, this is okay, this is okay, and then when it comes to permitting, he goes in there, does an inspection, and said none of these things are okay, I'm going to say that's not what you said before they lease the building. And so we hold each other accountable, so we always go together. The other reason we do that is because a lot of times when I go look at a property with someone, they've got questions about the building itself. And sometimes I can't answer them. I don't know if it needs a new HVAC. I don't know if all the life safety things are fine. That's not me. That's Josh and Robert. And so when you go together, the prospect can get all of their questions answered at the same time right there, and they will have a better understanding of what needs to be done before they can get in that building. So that's what we do. In addition, one of the things that we have in our packet that I go over is this booklet. And it's out of order right now because it's a PDF, but it's a book. And on the last page of the book, we have all of the contact information for everybody, including the state and the Department of Health, and anything that you need in order to get started as a business, anybody's information. So we've got all three of us. That's who you need to talk to for that. And then this is actually literally a checklist, and it starts at the beginning.
We're still seeing the slide with the fire marshal and the building official on there. Is that?
Oh, you can't see my little thingy? Oh, man. Well, anyway, I have this business guide, and I'll send it to all of you since my thing doesn't want to show it to you, but it has all of the information that they need on the last page. It's literally a checklist. It starts at go to the Secretary of State and register your business, and it ends at getting a CO to open your business. And once you've checked off all those boxes in order, you're ready. So I'll send that out to you guys, but on page 5, it also lists all of the incentives that we offer, and there's a huge paragraph in there about rural zones because it's such a good tax incentive. It's literally the best thing that we offer. And when you combine that with our local incentives, I mean, come on, why wouldn't you? Okay, you see this slide?
Yes.
Okay. So here's what to do. Business owners do not work in the government, and they do not understand what you're talking about when you say you're in a rural zone and you get tax credits. All they heard was money. They didn't hear anything else, and they don't understand anything else. So the first couple of years that I was trying to market my rural zone, a lot of people weren't going to take advantage of it because they didn't know what they were supposed to be doing. And neither did their CPAs because it was such a new program. They didn't know what to do either. So you have to baby these people. So what I did was I put together the actual step-by-step process. The first thing they need to do is contact their CPA and talk to them about rural zones. If you don't have a CPA who knows about rural zones, guess what? That's a great opportunity for you to go talk to them about rural zones, or for you to host a lunch and learn and let Trisha come talk to them about rural zones. I'm trying to get her some work. So then we tell them the next thing to do, and the next thing to do, and the next thing to do. Literally, I'm telling you exactly what to do. And I'm telling them also what they're going to need, and I'm telling them what I'm going to need, and I'm telling them what I'm going to do. That way they know exactly what they're supposed to be doing so that they can do it right from the beginning, and so that they can skip the I don't want to because it's too difficult, because it's really not difficult. It's just confusing. And there's a difference. Another thing to do is find advocates in your community. Your resources in your community will help you. I have 2 commercial realtors that know about this program. I work with these 2 realtors in particular because we're a very small community, and these are pretty much the only 2 commercial realtors that we have. So I talk to these guys on a weekly basis, and they know if they have a client or a buyer who's looking for something, or even if they're not looking for something, but they are looking to find the cheapest way to do it, then they can say, hey, I got this building over here. It's in a rural zone. It gives you tax credits, all the things. They know about it. I also have a CPA that I like to refer people to. And I say, if you have a CPA, use your CPA. But if you don't have a CPA, use this one. And I'll tell you why. Because remember when I did that lunch and learn, and I had Trisha and Cherie come, I had this particular CPA firm become very interested in the program. They ended up doing a lot of supplemental research on it, and they kind of specialize in rural zones so they can really help someone because they understand it. And they went to that lunch and learn, and they know the questions to ask, and they've got it. So they actually came to me and said, hey, if any of your businesses need help with this, I can help them. And so these are people throughout our community that are outside my organization that are my go-to people that know about this program, that can help promote this program, and that can help the buyers and the business owners with the program. So you need to find someone like this in your community. They're very helpful to me. The next thing to do is stay organized. You can see this video going. I have these folders on my computer, and this folder goes straight to the rural zone. It says rural zone information, and when you open that folder, every single thing that I have about rural zones that I need to give a potential new business is right here. That way, if I need to email it, I can select all and send that bad boy in about 2 seconds flat. If I've got someone who's interested and they want to meet with me, guess what? I can select all, print, and I got it ready to go. This video also shows that I have it in several places. So I also have a folder titled Small Business Recruitment Materials, and whenever anyone wants to come and meet with me, that's all the stuff that I have in my packets, all the incentives, all of the supplemental information about the incentives, everything that I need to go over with these potential businesses, and that includes this rural zone information. So there is a rural zone folder within my rural zone information, and then there's a rural zone folder within my small business recruitment materials. And so you don't have to do it this way, but this is the way that I do it because that's just how my brain works. So, are there any questions? I know I went over that pretty quickly and I may have confused a lot of you, but do you have any questions? I'll try to answer them.
I'm looking to see if there's any in the chat. No. Does anybody have any?
If you don't have any questions, that means that I am the most amazing presenter of all time.
Yes, yes, you are. You're definitely the rock star.
Oh, stop.
Hey, Jessie, it's Elizabeth Wells. I'm a team leader, was in Rossville, now in Lafayette. I'm presenting after you, and I just want to say I'm super excited about that because this is going to go quick because I think you just set the bar for best practices. And so some of my stuff is going to be absolutely redundant towards yours. I probably won't be as fun and spirited as you, but I'm super pumped to see that we're doing some good stuff, that you've substantiated it. So thank you so much. This was a great presentation.
Thank
really
you.
helpful.
I think I also did worst practices because I learned the hard way. So I'm trying to save these poor people to not learn the hard way.
Right.
Because I do the things I do now because I didn't do it right. So
Well, I mean, that's why I wanted you to come on and talk, because, you know, I've seen a lot of our brand new communities just sort of flounder because they don't know exactly where to begin. So I think it's really great for you to give your advice, you know, as a seasoned veteran rural zone team leader, you could give really good advice. All right, let me see. There was
now that the program is getting traction, I do have 1 year left, and I've got a waiting list of businesses, which is great. But we opened 6 businesses in the city of Cornelia in the month of October. 4 of those were in our rural zone, and all 4 of those will be taking rural zone tax credits. So that's, now that I'm in year 4 and I'm almost out of year 4 and I'm almost done with this whole program, now I've got businesses who want to take advantage of it. But it did take me a long time to get, you know, the first year, I think that Cherie was bragging on one of the first communities about how they had 20 in the first year or whatever. And I was like, I hate her and everything about her and everything that she does. And I was like not understanding, but now I get it. So I'm trying to help you get it before it takes you 3 years.
Okay, so you don't hate me anymore?
No, I love you now.
Good, good, good. Well, I also told them, Jessie, about how you helped to change our approved list of NAICS codes because of the event center. And somebody asked me, what is the NAICS code for event facilities? And because this thing is going on my computer, I can't click over on my computer to the approved NAICS code list. So do you know what it is off the top of your head? I think Jenny Robbins asked.
I would have to look it up because I think I think I dreamed about it for a long time, and then I tried to forget it and black it out in my memory. It was real rough. I think it's like 43011 or something like that. I'm not sure. 43018 or 17. Anyway.
All right, so everybody, I will send you out the approved NAICS code for event facilities because it's in a weird location, so it always takes me a little bit to find it, but it is in there.
Actually, I'm gonna. Oh man, I want to go back to my PowerPoint presentation. Am I sharing my screen?
I know. I only see you.
Oh, okay.
While you're looking for that, I also want to say that one of the things that Jessie emphasized and she said was you've got to baby them through the process. And that is something that I hear from several of our more successful rural zone communities is that they baby them through it, or they'll say I handhold them. I know Ashley and Perry says she literally sits down with them and helps them fill out their rural zone certification form, the part 1, and then she signs part 2, and then she sends it off. And it just takes that. And it also, I know Christian in Toccoa, when he has spoken in the past, he says, it really takes him going to a business more than just one time. Because he'll go the first time and maybe it's in the middle of it's a restaurant, it's the middle of lunch hour rush, and they're like, yeah, that's a great idea. And then he walks out the door and they forget it. So you've got to remember to keep putting this information in front of businesses, particularly if they're doing an expansion, they're hiring new employees, or they're doing some rehab work. Jessie, I know one of the things that you said when we were talking is that don't you do building permits?
Yeah, we're a real small community, and so the planning department is just one person, and that's the building official. And so he and I kind of tackle building and planning together. And so every single, especially with those monthly meetings and the fact that his office is right next to mine, every single permit that leaves this building, I know about. So if one of my existing businesses comes in and they're getting a permit for some sort of renovation, you best believe that I'm calling them and saying, no, you can get rules on credits for that. Are you creating new jobs? And they'll say, yeah, I am. And I'm going to say, okay, well, I got this form for you to fill out come January. And I promise you that I'll remind you about it and I'll bring it to you. And so that's just because we're a real small community and I wear a lot of hats. Then I have the ability, to see all those permits. But if you have a good relationship with your planning department, you should be able to go to your planning department and say, hey, have y'all issued any permits in my rural zone lately? Because I'd like to know about them. You know what I mean?
Yeah, that's a great idea. That's great advice.
The picture on the screen is the event venue.
I'm not seeing the picture on the screen.
Oh, you can't see it?
Uh-uh.
I don't know how to work computers because I'm not a millennial or a Gen Z. So I don't know how to work it. But anyway, I'll send you this whole presentation. You can look at all the pretty pictures.
But what were you were looking up the event number? Is that what you're talking about?
I was looking at the picture because I had it on my PowerPoint presentation
Oh.
of the event center I was going to show, but
Oh, okay.
whatever.
I'm trying to look it up.
All right. Any other questions or specifically for Jessie, as a rural zone team leader, can y'all think of anything that you would like to know?
Besides what not to do.
Right. Right. I'm going back up through the chat to see if we missed anything.
My business guide is online. Yes. It is part of, like I said, when you go to that website and you go to the economic development page, it's part of all of those supplemental documents, and we have them printed out in my office. So it goes in the packet. And like I said, when someone comes and meets with me, they get this packet and they get to take it home with them so that they can review it later, because I promise you they didn't understand 25% of what I told them in the 45 minutes it took me to review all of those materials. And so it gives them the opportunity to go back and look at it again. But yes, that business guide is online because we give that to every business who is opening in downtown, because a lot of them are small business people. They don't have degrees in business management. They don't have any of that. So they really don't know what they're doing, a lot of our smaller businesses. And so this really walks them through it, and they can literally check the box and then check the next one and then check the next one. So we have it everywhere. And I think Cherie just put the link.
Tracy just stuck that in there. So it's in the chat. The link to Cornelia's, the economic development packet, is in the chat. Okay. Well, thank you so much, Jessie. I really appreciate you taking the time to talk to us and put together that presentation. And now we're going to have Elizabeth Wells. As she said, she was previously the rural zone team leader in the city of Rossville, and she's now with Lafayette, which is one of our new 10 rural zones designated that'll start in January 1st, 2022. So, Elizabeth, do you want to try to share your screen? She was having some Microsoft Teams issues, so we're going to see if this works. Trish, did you get that number?
Not yet. I'll put it in the chat.
Okay. So when Trish gets the number for event facility, she will put it in the chat, you guys. Elizabeth, are you there?
I am. It's not letting me do it now.
Okay.
Of course. I'm sorry.
No, so let me try. I'm going to go to your email that you sent me and try to pull it up.
The last one that says final, since I sent you the wrong link twice.
Okay.
And don't be scared about the length. I did kind of like an inception presentation where I gave an overview of the presentation that I give to real estate.
Okay. All right.
Offices, and I'm going to blow through those first few slides to get to the end, but I'm just going to reiterate Jessie's though.
Don't worry about repeating yourself, because this is a training, remember, and the more people hear stuff, the better. So let me see if I can get, y'all tell me if this puts it on your screen. Are y'all seeing the bright blue slide?
Yeah.
Yeah?
Yes.
See it. Mm-hmm.
Okay.
Okay. So we were designated at the beginning of 2020. And one of the things that we were a little worried about, and I kind of touched on this a little bit towards the end, is some speculation. So we kind of entered into the market a little quietly with this, didn't blow it up. And then, of course, the world changed. So we changed our strategy halfway through the year in 2020. And it was incredible that we did, because we were able to begin to attract some pretty awesome new businesses. And we actually are on the Georgia-Tennessee state line. And we've been attracting new entrepreneurs out of Chattanooga across the Georgia state line with this rule zone. If you want to just scroll through, Sheree, I'll just kind of hit some highlights. So this presentation really just kind of talks about some of the benefits to being in Rossville. You can keep going. Again, just additional highlights of our proximity and what's happening with growth and the infrastructure that we have. Keep going. And this is just some of our goals that we have for the city. And this is mostly, Rossville is a community that has seen a lot of disinvestment. So we were trying to also build the case as to sort of the magic that was beginning to happen there. So it was a bit of a sales pitch on the front end before we ever really began to start talking about the incentives. And keep going, Sheree. Thank you.
So is this actually the presentation that you use when you talk to folks?
It is.
Okay.
It is, yeah. And so the end of this is the recommendations that I made for this particular presentation. Okay. But I kind of wanted to just show you some highlights of how we pitched this out into the marketplace. So we talk about the fact that we have a partnership with Georgia Tech. We talk about the fact that we've just updated our zoning ordinance. We just hired a full-time codes enforcement officer for the first time. We have an urban redevelopment plan, and I kind of go into a little bit about what that means. Okay, go ahead. And we talk about the fact that we have the federal qualified opportunity zone designation. We mentioned the rural zone designation. We talk about the fact that we have some very real capital because of SPLOST to make some capital improvements. Rossville is a tiny city, 1.8 square miles, and suffers from what a lot of our communities and why we got the designation is because it has just tremendous amount of pervasive blight and blight creep. And so what we're trying to show is that there were some really, active people trying to catalyze this community, and that these state tax incentives were sort of the largest draw to come here. Go ahead.
So who are you making this presentation to?
So we made sorry, go ahead.
No, just so everybody would know, just so, maybe they could.
So we had various stakeholders. This one in particular is for the real estate agents. And then we have one for civic groups. We have one for our financial institutions. We have one for some of the county stakeholders, the Development Authority, the Industrial Development Authority. And because we are on the state line, we're doing these presentations also with real estate agencies, not only in Northwest Georgia, but in Chattanooga as well. And it's really served us incredibly well.
Okay.
Keep going. So then I just go through the rule zone with the presentation, much like what we've already seen.
Okay.
And then we go through the federal opportunity zone and how it can be layered. Technically how it can correlate and work well with the rule zone. Keep going.
Okay.
And then we go through some additional job tax credits in case some of these businesses that we'd like to recruit to the area don't meet the rule zone criteria.
Okay.
And then this is just sort of the highlights. So we kind of talk about any designing or planning that we've been doing. We highlight the way some of the partnerships we formed with some of the larger metro areas around. We highlight the fact that we've been working with Ryan Gravel, who designed the Atlanta Beltline in the city, and that we've had a partnership with the University of Georgia with the design studio. Okay. And that we've developed a master plan for our largest kind of developable area, which is a 36-acre, 1 million square feet under roof, massive abandoned mill site that does have some new business and has a new contract actually to be redeveloped. Primarily because of the incentives that we have, both the federal opportunity zone and the rural zone. And they wouldn't have even looked at us had we not had that. And this is just some snippets of some of the master plan for that mill site. And we just kind of talk about it really quickly. Okay, keep going. And this is just about an urban design workshop that we hosted with Ryan Gravel and Jonathan Tate, who's an architect out of New Orleans, that had worked on some really larger projects in in some urban areas and some rural communities. Okay, and this is today's. So our rule zone strategy, some of this we've implemented in Rossville, some of it we didn't because we either didn't have the capacity with staffing or budgetary constrictions, but these are some of the things that we're going to be implementing in Lafayette. So much like Jessie mentioned, making this information easy to obtain, easier to understand, and to share, which is important as well. Identifying the stakeholders and just continue to, really educate. Develop clean and professional marketing collateral and presentations and leave behinds that we can give to people to share. Cataloging your properties. This is something that we could not do in Rossville. We didn't have the capacity, nor did we have actually a functioning city website. So a lot of ours was digital folders that we were sending out. Much like Jessie mentioned as well, having a direct line to new business licenses, building permits, etc. Looking at our zoning and evaluating it to make sure that it's not prohibitive to work and coincide well with this tax credit program. And talking to our rule zone team about kind of how to counteract negative effects of this tax credit, which I know sounds odd, but we were desperately afraid of speculation in Rossville because it had so much disinvestment. We had so many out of town property owners that were just sort of holding these properties and using them as tax shelters. And then to celebrate the projects publicly, both in the real world and on social media. Okay, go ahead. So making it easy to share. So much like Jessie, because in Rossville we didn't have a website that was adaptive or really functional, I developed a digital folder that I could send out to stakeholders. And knowing that some people wanted kind of the analog version too that they could print off. So in our digital folder, we had a simple slide deck. We used DCAs. We had a map of the rule zone. We had the Excel spreadsheet, and I don't know if Cherie, you'll talk about this a little bit later, about how to plug and play with your project and showing you how you can leverage these tax credits and what to expect around them. And that was done actually by other rural zone communities, Don Powers with Thompson and Steve Ledbetter with Woodbury. And then I always make sure and link our Muni code for our city zoning. Then we have the Naics Codes, we have the tax forms, an abridged version of any type of planning documents that seem enticing and exciting to prospective investors. We break down the local incentives really simply, both the rule zone and any other incentive we have. The real estate flyer that DCA put forward, which I would imagine you're probably going to talk about in a little bit, Cherie. Mm-hmm. And then a contact list of key city departments. And it was really important for us, much like Jessie, to set up a family meeting to get everybody in one room with the investor, developer, new business to see how we could streamline this rule zone project. Okay, next. Identifying your stakeholders, and then developing the professional marketing collateral. So who and what, especially much like Jessie, Rossville's a tiny community with a skeleton staff. So who could be our ambassadors? Who could help us promote this? And we did identify financial institutions, civic clubs, our county partners, real estate agents, local developers. And then we use Canva because we couldn't afford to contract design work out. So we tried to make as jazzed up marketing collateral as we could on Canva so that we can hand that out as hard copies and digitally. And this is just some of what we're developing. So a brochure and really just one-pagers, posters, et cetera, that, some of which other rule zone teams have provided. I think I linked a couple of examples a little further into the presentation, but. Okay. And this is something that we didn't do, that we are going to do in Lafayette. And we didn't have the capacity, the manpower, or the funding, but it's to catalog your properties So really being able to market your properties on your downtown site of what's available, what's vacant, what's for sale in our downtown, especially in our rural zone. And, we'll work with some real estate professionals as well. And also being able to link community code. So it's just really quick and simple and streamlined. And I think I have a couple of examples of some other rural zone communities that have done a really good job with this. So Bainbridge, just killing it. If you guys haven't been on Bainbridge's downtown site, it's amazing. They do such an incredible job. Hawkinsville, they have done a great job cataloging their properties in their rural zone. And it's just sort of like a digital marketplace where you can easily send out links and kind of show people what's available for purchase or lease in your rural zone. And again, just making sure that you have, a pipeline so that you understand what new businesses are coming in, who's buying buildings, who's working on permits, what the DDA is working on. If you don't have a rural team leader that's also directly related to the DDA, and making sure again that your zoning is not prohibitive. We went through a massive zoning update in Rossville to make sure that the way that we were zoning too helped really support rural zone projects. Okay. And so we had some pretty hefty conversations with our rural zone team and our DDA about the fear of speculation. So we were afraid that we were going to make this big announcement in our community, and then the prices of all of these properties were going to skyrocket. We didn't really see that happen in Rossville. We were surprised. COVID may have had something to do with that. We did lose a few rural zone opportunities during COVID. But within the last 6 months, we've had a deluge of new businesses come in, and they're starting to fill out all of their rural zone paperwork. And it's everything you could want. We have a new meadery, we have some restaurants, we have, artist and graphic design business. We have, it's been amazing to see what it's brought. And it's been a lot of great young entrepreneurs that are coming in. And like I said, this 36-acre mill site, this rural zone tax credit was so insanely enticing to them. And it's the reason why they decided on our site versus a site in Chattanooga, actually. And something that I tell our rural zone team to kind of talk about is, the rural zone doesn't make a bad deal good. It makes a good deal great, and it's not going to make you solvent on a deal that doesn't make financial sense. And so that's a lot of the same conversations we have with property owners too. Comps are real, and this doesn't necessarily make their land more valuable, but it helps them move the property. It helps it get developed. And so far, a lot of our conversations have yielded really fruitful results, and we haven't seen the speculation that we were worried about. And this is just more about how to celebrate the prospect of a rural zone coming in. I think is that Monticello that designed that poster, Cherie?
Yeah.
Super cool concept to put it into a building that that you have for sale, and beside the real estate agent's listing, and gives the DDA, I think, contact information so they can follow up about that. Really promoting these projects over social media. And then we've developed a concept that we're going to start doing where once a project kind of gets going, to highlight that it's a rural zone project, and to show that, basically without this incentive, it wouldn't have came to Rossville or wouldn't have came to Lafayette. And this is the last slide that I have, really is about leaning on your other rural zone leaders. And we hear a lot about R&D, the rip off and duplicate model. And of course, giving credit to whom you ripped it off from, because it's, they've worked hard on it, had some great ideas. And the thing is, you don't have to reinvent the wheel to promote this. And as you can see, a lot of my presentation is so similar to Jessie's. But I think some of the lessons that we've learned is, to be strategic about how you deliver the information first, and then just, work really hard to get it out there across multiple stakeholders. And we're now, I guess, about a year and maybe 18 months, 19 months into ours in Rossville, and we're just starting to see the fruits of that labor. And so there's a lot that I've learned in working on the Rossville designation that I'm super excited to take with me to Lafayette. And we're just super excited to launch and get started. And I look forward to kind of working with all of the rest of the leaders on sharing ideas and best practices or what doesn't work.
Yeah.
But that's what we've done.
Does anybody have any questions for Elizabeth? Check the chat. Okay, I don't see anything. Thank you so much, Elizabeth. And what Elizabeth is referring to too is, the way that we can share ideas is that I have an email list of all the rural zone team leaders. And so if something comes across my desk that I think could help in a rural downtown, then I always try to send it out. But if you guys, come up with some great way to market the rural zone program in your area, definitely share it with everybody else. So we try to share ideas on that forum as well. And the sign from Monticello was something that Monticello shared, and I think it was a great idea. All right, thank you, Elizabeth. Okay. All right, so now I'm going to just run quickly. We've talked about some ideas for promotional materials, but I just want to recap again. We're trying to, this is a training, so that's why we're repeating ourselves, because we want you to understand that these are ideas that, I'm not just saying you need to do, but we've had 2 rural zone team leaders say you got to do to be able to get the word out. Can y'all see my screen? Or do you still see me?
You.
Okay.
But you're real pretty.
Thanks. Share content. Okay, there we go. Now do y'all see this screen? Rural zone promotional materials.
Yes.
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 Thank you. All right, so again, what we have found out by looking back at our most successful communities, the most successful communities are the ones that promote the heck out of this thing and hold hands with their business owners to help them utilize the tax credit. All right, so some of the ways that you can promote the tax credit, do press releases in maybe your local newsletters, maybe your chamber newsletter. Send our press release to newspaper, handouts, brochures. We've got a postcard you can use, the signs Elizabeth mentioned, PowerPoint presentation, and then of course updates to the webpage. And I'm just going to go through those really quickly. So we do have a rural zone press release. This was just sent out earlier this week from the Department of Community Affairs. Once we finish this, I will send this press release out to you guys so that y'all can send them to your local newspapers, or like I said, you could, put it in the chamber newsletter or another newsletter in your community, put it on your website. So I will send this out to y'all. I will also send out a copy of what I call the rural zone one-page information sheet. So we put this together for all of y'all. This is the one you can see for City of Millen. They all look the same. We just changed the name here. We leave the bottom part blank so that you guys, as the Rural Zone team leader, can put your contact information there. And this is just an information sheet that as you're walking around downtown, you can hand out to business owners, or, you know, keep there in your office to give out. It just is sort of a little teaser that tells a little bit about each of the 3 tax credit programs, but your information, your contact information is here so that if folks have additional questions, they can come to you. It is a 1-page front and back, and on the back it will have your community's official rural zone map so that the business can check and see if they're actually located within the rural zone and to see if they're eligible for the tax credits. So I'll send that out to you guys. Other folks have done or designed other 1-pagers. This is the one, for instance, from City of West Point. The Electric Cities of Georgia group helped put this together. And I understand from John Van Brunt that ECG would be willing to help other ECG communities like this year, Cordele, Thomaston, and there's one I'm forgetting. There's another one that I'm forgetting. Cordele, Thomaston, and another one. What? Lafayette.
Yep.
Yeah. They will be willing to help you put something like this together for an information sheet. Brochures. Elizabeth showed you a copy of her trifold brochure. This is the one from Bainbridge. So this is the front of their brochure. And then the middle that goes through the 3 different tax credits. It doesn't go into great detail, right? But just enough to get somebody interested in the program, interested enough to contact you to get more information. We also have a postcard, and I can send y'all a link to this after we finish, just a front and the back. If you want to send out just an easy postcard, again, with your contact information, to your existing businesses, this will be an easy way to get the word out with postcard. Then, of course, we need to make updates on web pages. I think, let's see, Jessie showed you what she has on her web page. This again is Bainbridge. Bainbridge is the reason why Jessie hated me, was because I was bragging on Bainbridge. Bainbridge, in their first year of being a rural zone, I think about 26 properties exchanged hands that first year, and their vacancy rate went down by like 15%. So they definitely were one of our initial success stories. They're still doing a great job promoting the program. But on their website, you can see here the rural zone tax credits are listed under various tax incentives that are available. And then you click on that, takes you to some information about the rural zone credits. Also, let's see. Oh, and see, you can click here for more information, Georgia Department of Community Affairs. Click here for the approved rural zone NAICS code list. Then they have the official map with the contact information very clearly here with Amanda's email address. You can click here for information for brand new businesses. And then it goes on further to actually brag a little bit about the number of tax credits that have already been claimed in the city of Bainbridge. So job tax credits since 2018 are about at 125,000. Investment credit, maybe 175,000 in tax credits, and rehab credits about, gosh, 550,000 maybe claimed. So that's over the life of their rural zone. You can even click here for Bainbridge Rural Zone Success Stories, which takes you to a presentation, a PowerPoint presentation that Amanda Glover, who is the director of the Rural Zone down there, put together, where she just brags on the program, and because it has done what it's supposed to do in downtown Bainbridge. So since January 1, 2018, when their program started, they had 41 vacant and vacant blighted structures. As of November of 2020, that was down to 15 vacant and vacant blighted structures. And then when they first began in 2018, their vacancy rate was 24%. And as of November of 2020 was down to 9%. So really, really good to share those success stories and brag about what's going on in your downtown. Another webpage of a successful rural zone community, Perry's, gives a brief description of the program. There under economic development, clearly shows the contact person, Ashley Harden, who's the rural zone team leader there. You can click here for a summary of the rural zone program, and then here for the rehab standards, here for the map. Again, a copy of the signage. We just all thought this was a great idea that somebody came up with in Monticello's rural zone, that, hey, it's a vacant building, but just want to let you know that this property would qualify for the Georgia Rural Zone Tax Credit Program. And you can ask your realtor about those tax credits or contact the Monticello Downtown Development Authority for details. So just something to consider when you have vacant buildings in your downtown, another way to get the word out about the rural zone tax credits being available. The other thing is, and I will send this out to you guys, is a sort of a template PowerPoint presentation that we created for you. You can fill it in, like for instance, here it says, insert picture of your city here. It's basically my PowerPoint, but where you can tailor it to your city, so that if you're going out to talk to the Rotary Club or Kiwanis Club or your DDA or your Main Street Association, you can use this PowerPoint and not have to start from scratch. Okay. Again, basically the same thing that I talked about. Then here you can tell exactly who the local contact person is. There's Trisha's information, things to keep in mind, FAQs. Tried to keep the FAQs very simple. And then at the end, it's where you can go into talking about other supporting tools that are available in your downtown. So you can tailor this to what you have available. If you have a facade grant program, you might want to talk about that. If you have a local revolving loan fund, you want to talk about that. If you want to talk about the downtown development revolving loan fund available through DCA, you could talk about that. So just leaving slides available for you to insert information about local incentives that you have available. Any questions about those promotional materials? And I will send you those links that I said I would. Any questions in the chat, Trish?
Trish has left.
Oh, that's right. Okay, I don't see any messages in the chat. All right, so I am going to move forward with just the annual reporting overview. So this is something that y'all will have to do every year. You will need to turn it in December 31st of next year. And the annual requirements for rural zone communities are that they attend an annual training. This will be considered your annual training for next year, even though it's happening now. And we have not been doing in-person trainings. Instead, I have been sending out links to videos of trainings that we have on DCA's YouTube channel, just so you know. And then we ask that all communities submit annual reports detailing exactly what steps that y'all have done to facilitate business development within the past year in the rural zone. And basically that's so that I can understand, if you're doing anything new and exciting and innovative, I can share that with other communities. And then also tell me about any private activities that have spurred revitalization efforts within the zone. So if any businesses have come in, what they have done. And I use the annual report results just to talk about the program. If any of the legislators ask, is the program successful, I'm able to talk intelligently. I haven't updated the slides. I apologize. This is the annual report results from the 2018 rural zone for those first communities, those first 9 communities. But it definitely shows some success. So for instance, that first year from January 1 of 2018 through December 31st of 2018, this is what happened in those 9 rural zones. The average vacancy rate for those in 2017 when they applied for designation was 26.1. By the end of 2018, the vacancy rate had gone down to 18.6. The total number of parcels that were sold within the rural zones were 72. Sorry, it's hung up again. Number of rehabilitations in those 9 zones was 48 that year. Total number of new businesses in those 9 zones, 42. Total number of jobs created, 195. Really good number. The total amount of public investment, so made by the local government in the rural zones for that calendar year was 2.1 million. And then the total amount of private investment, you know, in the renovation of those buildings was 8.4 million. So really good numbers even that first year. Here's what the rural zone annual report looks like. You have a copy of this, and I will of course send it out towards the end of next year just to remind you that it's due, but it's something to keep in mind that you do need to keep track of these numbers so you'll have them at the end of the calendar year. We're going to ask for things like tax value of the parcels, which you'll just be able to get from the tax assessor's office as long as they have a map of the official map of the rural zone. Because as you know, several of you brand new communities, the 10 that were designated, I think about 5 of those, the map that you had proposed in your application was tweaked by DCA. So make sure that you're using the official map by DCA. I'm also making a note to myself right now to make sure I send those out to you. I think I already did, but just in case I didn't, I'll resend them. Okay. Number of parcels acquired within the rural zone, and you'll see that there are 2 slots for that. So what I'm asking is the total number of parcels that were acquired within the rural zone that are eligible to claim the rural zone tax credit that year, or if they're going to have to wait. So they haven't created the jobs yet, so they're going to have to wait. Total number of parcels acquired within the rural zone that are not able to claim the rural zone tax credit maybe yet. Then I asked for the total number of buildings renovated within the rural zone that are able to claim the rural zone tax credit that year, and then the number of total buildings renovated that that are in the rural zone that aren't going to be able to claim the rural zone tax credit maybe ever or maybe yet. Just wanted to keep up with that information. Total number of new businesses created within the rural zone that are able to claim the job tax credit. Estimated value of private investment versus public investment within the zone, an estimated number of jobs created within the rural zone, and then the vacancy rate of the parcels. Again, I'd love to have that vacancy rate in December of 2022. I'm going to compare that to the vacancy rate that you guys included in your application. And of course, we want to see that number go way down. So that's the first part of the annual report. Those numbers you'll need to keep up with. And then I just ask you to give me a brief description of some of the things that you guys have done to promote the rural zone program that have been successful in your community. Again, like I said, so I can share that with other communities. And then please attach a description of the renovation projects or new businesses that have located within the rural zone over the past year. Include a separate page for each project. Sometimes the local newspaper has done a really good description of a new business coming in and the work they did on the building. So some team leaders just send me a copy of the newspaper article, and that's fine. You don't have to go into great detail, but if you've got some before and afters, I have in the past nominated these for DCA awards. So please help me out by including really good projects. And again, for you guys, this annual report will be due the end of your first year, which will be December 31st, 2022. Okay, any questions about the annual report and putting that together? I do not see anything in the chat, so I'm going to move forward. Will the annual report slide be sent out? Yes, I'm going to send out, well, actually, you already have a copy of the annual reporting form. It was sent to you via email, and it was also attached to the meeting invite. But let me know if you need me to send it again. Okay. All right. We're coming down to the end. Looks like we're going to be able to end early. Yay! But I did want to do a recap of what we talked about today and some key points. Key point, job creation has to happen for a business to get any of the tax credits. Something key to remember. And promotion. The more you promote this thing, the more businesses are going to be able to use it. Please don't think that you can put this on your website or even just create a brochure that just sits on a counter and that's going to be enough for the businesses in the area to know about this program. You got to, like I said, get out there, promote it, talk about it often. So I made this sort of little cheat sheet, kind of a get started. So you're going to go out starting January 1, businesses are going to start talking to you about the rural zone tax credits. So what are the first questions you need to ask yourself is if a business approaches you about the rural zone tax credits, what are you going to do first? They say, okay, I'm going to purchase a building, renovate it, and it's, you know, it's going to happen. And you're going to say first, okay, but will the business create at least 2 new jobs? That's probably the first thing you could say, because as we've said, job creation is the key to unlocking all these. So the first thing you should ask that business is, all right, well, that sounds great. I'm glad you're, welcome to town. I'm glad you're going to be doing those renovations, but are you going to create at least 2 full-time jobs? If they say no, well, boom, we know the business is not eligible. If they say yes, we're going to move on to question number 2. Question number 2. All right, well, is the business located actually within the designated rural zone? You're going to check that official map that I'm going to email out to all of y'all today. You're going to make sure that that business's location is actually on the map. If it's not in there, again, sorry, you're not eligible. Your location is outside of our rural zone. But if it is, then we're going to move on to question number 3. Does the business have an eligible NAICS code? What are you going to do? You're going to check your handy dandy rural zone approved NAICS code list and see if they're actually on there. No? Well, then the business is not eligible. But we have already talked about a second step that might go in here. If you think, or your DDA thinks that this is a business that really is needed in your downtown, but it is not on our approved NAICS code list, there's always the possibility of doing that letter of determination to see if perhaps DCA and Department of Economic Development will give you permission in this, one instance for that business to be located within the rural zone and receive tax credits. All right, let's say they do have an eligible NAICS code right now, then let's move on to number 4. If they've answered yes to all those questions, are located within the zone, they're going to create at least 2 jobs, and they have the right NAICS code, then you are going to assist the business with completing the rural zone certification form. And the advice from veteran rural zone team leaders is that you need to just sit there and hold their hand while they complete part 1 of that form. Then you will complete part 2. That's where you sign off on it. And then you're going to send it via email or mail to Tricia DePadro. There is her email address at DCA, and she will sign off on part 3 to finally certify the document. She already explained that she will send you a copy of this back, and as well as the business, and that's what the business will attach to their Georgia state income tax return. All right, But once the business has the 2 jobs in place, then they can apply for the tax credit on their state income taxes. Remember, it's only once the 2 jobs are in place. So if it takes the company a year to rehab a building, then they will have to wait until the following year when they create jobs and jobs are located within the building to take the tax credit. In order to take the tax credit, the business is going to need that completed rural zone certification form that you're going to have a copy of and they're going to have a copy of. And then they will also need to fill out the Department of Revenue form ITRZ. There's the link to that to include with their return. If anybody like a CPA or an accountant has questions about filling out the Department of Revenue form ITRZ, I will refer you to Tricia. And so mine and Tricia's information is on this 1-page sheet that I'm also going to email out to you when the presentation is over. Just, so you'll have this to refer to, because we're talking now November 3rd and you might not have questions until January. So I want you to be able to remember and have a little cheat sheet on what we've talked about today. Any questions?
Sheree,
Yes.
I have a clarification, I guess, as much as anything.
Okay.
Obviously, you've got a investor that comes in, buys a building, rehabs it, and then leases it out to a whatever kind of store, a boutique or something like that, and they create 2 to 4 jobs. So the investor who did the investing, he gets or she gets the tax credits on the purchase and the rehab.
That's right.
Now they didn't actually have, and they get, I guess, credit because of the business that's hired the extra people of having at least 2 people. Do they get to take the tax credits on those people as well, or is it just that independent business?
The business that creates the jobs is the one that gets to take the tax credit.
But
the job tax credit.
Right. But the investors get the rehab and purchase.
That's right.
Okay. So if I've just got somebody that moves in a design boutique downtown and creates 2 full-time jobs, and they're leasing a space that was already renovated, they get job tax credits.
Mm-hmm. Yes.
Okay.
Yes. And remember, you guys, when if you're talking about people right now that are looking, make sure they understand they need to wait until January 1 of 2022 to do anything so they can get credit. We have had the question come up, though, that let's say somebody already purchased a building and they're just about to start renovations, like say right now in November. But the renovations will probably last 9 months. So how would that affect them? Well, any of the cost accrued in this year, they would not be able to take the credit on only those costs from starting January 1 of 2022. Would they be able to take the rehab credit on? Any other questions that have popped into your mind?
For these tax credits that you're saying, for, like you just said, they start on January 22, say like for Forsyth, since ours was designated as a rural zone in 2020, is ours already open, or?
Yes.
Okay.
Yeah. Yours is already open. So y'all started in 2020?
I believe so. Mm-hmm.
Yeah. So y'all have already had it for 2020 and 2021. So you've got three years left.
Okay.
Anybody else? All right. Well, I'm here if a question comes up. I am going to add you guys to my Rural Zone Team Leader email list. So y'all will be getting emails from me. Feel free to do reply alls if you have questions, if you want input from other team leaders, again, that have been around longer than y'all, so they may have some good advice to share. Feel free to reply all on those. And I thank you for being here this morning, and congratulations on your rural zone designation. I'll talk to y'all later. Bye.